What is private money and why do we need it in real estate? Have you ever wondered how successful real estate investors fund their deals without using their own money? Today, we're going to be diving into private money lending, which is a game changer that will unlock limitless opportunities in your real estate business. Welcome to day one of our second series, Raising Private Money in Real Estate. My name is Michelle, and I am here to help you through your real estate journey by providing you my story that will hopefully inspire you to take a leap of faith and build your legacy while impacting others. Today, we are going to talk about private money and just the basics. Why is it different than traditional financing and how it can help you build your wealth and scale your real estate business? But disclaimer, before we dive in, I want to remind you that the insights I share are based off of my experience, so always consult with your legal and financial professional to tailor your strategies to your situation. So, when I first got started in real estate, I actually didn't use any private money. I didn't believe in loans from individuals, and I just didn't believe in owing people money. It wasn't until I met some people within my mastermind that really started to change my thinking and my mindset when it came around private money. So I traditionally, when I first started, I used hard money loans as well as my own savings. And at that time, my mother was my business partner and utilized some of her savings to be able to grow our portfolio. Not until probably the 19th deal did I realize that we ran out of money and that we needed money to be able to keep going. A lot of people talk about the BRRRR strategy. I'm here to tell you, in my personal opinion, that may not be great for the first-time investor. What is BRRRR strategy? Buy, renovate, refinance, and repeat. It can work in some markets, but in our particular market, it did for some time, and then we really did still run out of money. So at that point, I didn't know what to do and how to continue to pivot. So I was able to meet an OG in the market, and he was able to guide us, which is my business partner now, of giving us and encouraging us to actually give other people opportunities to be able to partner with us. All right, so let me break this down for you. Number one, what is private money? Private money refers to funds provided by individuals, not banks or financial institutions, to fund real estate deals. So beware when you have a hard money lender that is contacting you and says, I am a private money lender, but I'm wanting to charge you points, or I need to know your experience, or you're going to need to fill out all this paperwork. If that is, stay away. That actually is not a true private money lender. These lenders could be family, friends, colleagues, or even strangers looking for a good return on their investment. Unlike traditional loans, private money is all about relationships, trust, and mutual benefits. One of the things that you have to think about is that these individuals don't necessarily want to be boots on the ground, and they want to still be in real estate, so they will loan to you to be able to get a return on their money once you have either fixed or flipped, buy and hold, or refinanced out of the actual deal. So number two, how is private money different from bank loans? Well, truth be told, flexibility. With private money, you are not tied to any strict bank requirements or long waiting periods. Sometimes with hard money lenders, they require you on a draw system. So you have to finish 10 or 15 or 30% of the project. before you can get any of the monies released. And sometimes when you're just starting out, your contractors want to get paid before that release, and they don't want to wait for an inspection to come in and to be able to get that money released, which takes 3 to 5 days, sometimes takes up to 2 weeks when we used to borrow hard money ourselves. You don't want the contractor to walk off the job. So with private money, if done correctly, you have that all in a bank account that you can be able to access it for immediately for your actual draws, but doing the draws personally. So that is one of the benefits for private money. You also get to negotiate the terms and often tailor it to the deal. Also, money loves speed. So if you need to close quickly, private money allows you to act fast, which is critical in competitive markets. If you are buying from wholesalers, from sometimes real estate agents, and it's a really good deal, you don't have time with traditional banking that will take 30 days to close, 60 days to close. And when you're purchasing an investment property, there are times that you need to close as little as 7 days. So this is something that private money can be able to be an advantage for you and be a value add. Even if your credit isn't perfect or you are self-employed, private money lenders are more interested in the deal than the financial history. They are backed by real estate. So that is the collateral when it comes to actually lending to you. So you obviously still need to be a ethical borrower, but they don't have to run a credit check in order to provide you private money lending. Number 3, why do you need private money? Private money opens doors to opportunities that might otherwise you may miss. Here's why it's essential. To scale your business faster, with private money funds, you can work on multiple deals at once without being limited to your own capital. You can increase your ROI by leveraging other people's money and allowing you to spread your resources across multiple deals. You can build wealth while helping others. You are not just benefiting yourself, your lenders earn a solid return too. So one of the reasons why I love private money lending is because typically the lenders that lend to us have already either are retired or looking to retire, or they have savings and they don't necessarily want to become a real estate investor. They were a successful W-2 employee. They just have money and they don't know what to do with it because sitting in the bank doesn't give you a big return. So when partnering with those and they are able to be a debt partner and get money and become my bank, I'm going to pay that interest no matter what. So it's very refreshing and it's so just gratifying to know that I'm able to help an older individual, your grandma, your other family member to be able to grow their retirement. I think, in my opinion, banks have enough money to be able to continue to grow themselves. But with private money lending, it really is a win-win situation for everyone. I'm giving other people opportunities to partner with me and be my bank in order for us to continue to grow our business as well. So I really want you to take a moment and think, who is in your network that might have capital they're looking to grow? I would strongly encourage you to jot down a few names, maybe family members, coworkers. Start to consider how you can approach them about private money lending. If you stick with us through all of the series, I will teach you how to overcome some of those limiting beliefs and those myths, because I know what you're probably thinking. Why would someone lend their money to me? The truth is, private money lenders are everywhere. You just have to be able to educate them for them to really understand exactly what they're getting into and what the risk is, and being able to understand that you know what you're doing. There are regular people who want a return on their money and they are getting into the savings account or into the stock, moving them from the stock market. And when you present a really good deal with confidence, they will see the value of you partnering with you. So I want to really, really encourage you to start to just think of individuals that you know that possibly have been working at a firm, working their 9 to 5. I will tell you that it has been very surprising through my journey that individuals that I speak to and I talk to before ever lending money to me, they'll tell me that they have $30,000 to lend. And by the time they understand our process, which I will be able to show you a little bit of that framework throughout this series, they all of a sudden have friends and family, and or their particular retirement actually doubled, and now they're really interested in lending with us. So what I want you to do is, today we just covered the basics of private money lending, what it is, why it's different from the bank financing, and why it's so powerful tool for scaling your real estate business. Next episode, we'll dive deeper into the types of private money lenders and how to identify them in your network. You won't want to miss this. Before we go, I want to let you know that this is a series, it's just the beginning. I'll be hosting a web class soon where we'll dive deeper into raising private money and building wealth through real estate. If you are interested, type private in the chat or click on the link below to join the wait list. Thank you for joining me today, and I am so excited for what's ahead for you in this series and for you to take the first steps into raising private money. Until next time, keep building wealth and creating your legacy. Bye for now.